Hey everyone, welcome to Compound Thesis, where we discuss the intersection of crypto and the capital markets. I'm Jim Hiltner, and I'm the head of sales at Compound. Today, I'm super excited to be joined by Matthew Sigel. He's the head of digital asset research at VanEck. VanEck is a leading provider of ETFs and mutual funds with strategies across multiple themes, sectors, asset classes, and geographies, and they manage over $50 billion in AUM. Matthew, welcome to the show.
Hey, Jim. Thanks for having me.
So your LinkedIn profile says recovering CFA. Can you tell us a little bit about your journey within TradFi and how that brought you to cover digital assets?
Yeah, sure. So I do have a CFA charter and was a member of the New York Society for some time. I guess I got some conviction that with the rise of social media, that markets were changing, that kind of the mimetic factor was bigger than it had been in the past. We saw that with meme stocks. I think crypto is a personification of that. Capital formation. The process of capital formation is faster now, and that's an innovation that we've had from traditional markets. As far as my own journey, I started off in the news media industry, so covered finance for Bloomberg, CNBC. Got, I guess, a bit alienated from kind of that mainstream sausage making news narrative. Many who are invested in crypto are familiar with that feeling. So got my CFA and worked for Cathie Wood for 4 years at AllianceBernstein on thematic equity funds covering Web 2, underwrote open source investments like Red Hat, worked on a lot of our Web 2 investments. Left Cathie in 2011 and spent 10 years in investment banking, but I was always on the lookout for, what are going to be the technologies, the companies that eventually take margin away from those Web 2 giants that we had so aggressively invested in, and was always hopeful it was going to be technology and not regulation that took margin away. I think we're kind of seeing both of those at the moment. But first bought Bitcoin in 2017, saw that as like the killer app of this new cryptography technology that had the potential to disintermediate value creation. And then when DeFi summer came along, it felt like smart contracts had reached a level of maturity that gave me conviction to join the industry full time.
That's amazing. Well, quite a winding path, but makes sense the evolution of to where you're sitting at today. And so, kind of like looking at your role as the head of digital asset research, what does that mean for an ETF mutual fund provider? And like, can you share a little bit more about your role?
Sure. So VanEck as a firm has large investments in gold and gold mining stocks. It's part of the DNA of the firm. The CEO's father had an international mutual fund in the early 70s that he pivoted to all gold mining stocks when the gold went off the dollar. And, that was a heroic call, but it made us maybe disproportionately exposed to that asset class and highly attuned to potential disruptors. So when Bitcoin came around, we were among the first to apply for a spot ETF that has, not materialized because of regulatory concerns. We have a futures ETF, but we realized that the industry was going to move on with or without us. So we made a number of private investments across the space to build relationships. Writing checks to VC firms, early stage, and also involved in some of the private rounds of larger cryptocurrency exchanges like FTX and Gemini. And then armed with those relationships and more conviction, we've set up a number of both listed crypto funds in Europe that you can buy in ETN form, and then here in the US, 3 actively managed private funds that look to access the growth in the space. So I oversee a team of analysts here and run one of those private funds.
Amazing. So yeah, on that note, like your team put out a piece recently where you shared your framework about how you approach valuing digital assets. Could you just give us a kind of high level overview from like your top down thematic approach all the way to the bottoms up selection, and just give us a high level overview of like what it means to value digital assets from your perspective?
Yeah, I think we approach crypto digital assets as call options on an alternative financial future that kind of has Bitcoin at its core. And call options are very volatile. They generally don't comprise a majority of investor capital. So across VanEck, we have about 1% of the firm's AUM in crypto. Now that 1% is consuming a higher percentage of our incremental investments because we're placing bets on this future. But we imagine a world in which that 1% is more like 10%. And then we divide the investment opportunity into three kind of primary vectors. And there's Bitcoin as a competitor, collaborator to gold. That's reasonably easy to value on that benchmark alone. We can debate whether that's the most appropriate or only benchmark. The second is kind of smart contract enabled tokens, and that's an investment opportunity which is unique given the capital formation process that I described earlier. And then there's lending and borrowing investments that you can make in crypto. So we have funds that kind of approach each of those vectors. And then from the perspective of like the bottoms up, how do you value a given token? I mean, we're modeling a world basically comprised of three end markets, each of which will lose substantial gross profit dollars to Web3. So those three are finance, and finance is comprised of payments, brokerage, borrow and lending. So right now that's crypto is a de minimis, captures a de minimis percentage of that revenue stream. We assume that grows to approximately 10% by 2030. Second category is a new category that we call open metaverse. This largely consists of consumer-focused gaming, social media, e-commerce, and advertising. We assume that the metaverse captures about 30% of those industries by 2030, 30% of the revenue stream. And then IT infrastructure. This is mobile networks like what Helium is building, or like decentralized GPU rendering like what Render's trying to build. And we assume that these decentralized infrastructure services can capture 10%. So it's 10%, 30%, 10%. And we then apply a take rate. What percentage of those revenues will open source protocols capture? Those take rates are lower in highly competitive industries like finance. They are higher in more consumer-facing businesses. And with that in mind, we get to a top line revenue number, about $2.5 trillion in 2030. We tax it, we discount it using a pretty high cost of capital, and then we track market share progress. Which are the blockchains that are gaining share, likely to gain share in each of those subsectors? If you do that, you end up with very large, very high target prices, sometimes 10x or 15x. Remember my comment at the onset here that these are call options, and then we size our investments appropriate to those upside and downside cases.
So, I mean, you had a winding path from, AllianceBernstein, which is, one of the largest legacy, kind of asset managers across multiple markets, into now this kind of Web3 space. Can you point out like a one similarity and one difference between the framework you just described and like how you approached Web2 or traditional asset classes?
Sure. The similarity is in a search for cash flow. So at AllianceBernstein, these were, as you know, probably from observing Kathy's portfolio, these are long duration assets where the cash flows may materialize at some, far future date. But we did have DCFs, and we were on the lookout for like cash generating moat businesses, right, that would capture an outsized market share in like winner take all network effect enabled markets. And that's similar. I would say that the path to get there and really just the information sources are the biggest differences. So, in public equities, there's a lot more standardization around disclosures, and even data providers that compete like FactSet and Bloomberg are still largely harmonized around GAAP earnings, or a kind of a common vision of pro forma. Like that is decidedly not the case in crypto. And while all of the activity on open source blockchains is theoretically very transparent, data requires a lot of observation and cleaning and kind of standardization and therefore assumptions. So I'd say a lot more assumptions in this market, but we still are in search of that North Star, which is, cash earnings in winner-take-all markets.
Right. So a lot of standardization of information to try to give you some way to build these models. And as you think about aside from like the single token view, and you think about portfolio construction, I know VanEck takes a really long term hold view. Look at your hat that you're wearing today. But how do you think about like rebalancing or adjusting positions in the portfolio, just like from a overall portfolio management perspective?
Sure. So it depends on the fund. We have one token fund which is more actively managed, where we're trying to pick the best 20 to 30 crypto projects, underwrite these kind of long-term price targets, and like own these projects for a number of years, but be very cognizant of the fact that half of the moves we estimate in this market are driven by speculation, not fundamentals, and kind of token supply demand dynamics regarding like the vesting of tokens that have been given or sold rather to venture capital firms or handed out to teams in the form of compensation. When those tokens vest, they're often sold. Like you can track that progress. It's very lumpy. And it makes sense to aggressively manage position sizes when dynamics like that materialize, and also to recognize that there's some macro forces that crypto has kind of observed over the last 10 years, and when conditions are quite negative, then a higher proportion of cash is appropriate. So that more kind of alpha oriented fund is reasonably aggressive about managing our directional bias. We kind of oscillate between like 50% long to 90 to 95% long, depending on market conditions and depending on the token specific kind of supply demand. We also have a more beta oriented product, the one which I manage, which looks to outperform an index of layer one tokens that we designed. So we did a taxonomy of the space. We created a number of sectors. We got some conviction that the layer ones, the smart contract platforms, have the kind of the largest total addressable market, the most clear stream of earnings at the moment, and a pretty high kind of friction cost, tough, not always so desirable for developers to switch back and forth between these. So that sector looks attractive, and we have a product which is based on a benchmark that we designed, which rebalances monthly. It's a market cap weighted benchmark, but single coins are capped at 30%. So there's where you can kind of feel like TradFi meaning crypto, in the sense that it's a monthly liquidity product, and we're essentially buying every month as the index rebalances.
So you mentioned earlier, about long duration asset, the exposure, and clearly as the Cathie Wood model, and crypto certainly is of the same mindset. There's a lot of idiosyncratic factors that have impacted where the crypto market is headed over the last few months. But how does the overall macro environment impact your approach to this space? I'm sure that there's quite a bit that you're monitoring in terms of central bank activity and just kind of like overall macro forces. So could you talk a little bit more about how the external non-crypto environment impacts the way that you think about investing in the space?
Sure, and I would report from conversations with clients and prospects that the macro environment is clearly keeping people on the sidelines.
Sure.
There are a lot of investors who now have done the work and are like ready to invest, but are holding back because of market conditions. And the most obvious one that I would point to is just the yield on T-bills. So if you can earn 3.5%, 4% on T-bills, then suddenly like an Ethereum staking interest rate of 5% just looks decidedly less attractive than it did 6 months ago. And that's kind of factor number one.
Yeah.
And the second is the political calendar, I would say. We're kind of are finishing the first 2 years of a new administration. That's when all of the early like initiatives are proposed. This administration has been quite anti-crypto and has been joined by several kind of multinational institutions with that negativity. We'd argue that we're kind of at the peak of that cycle, that the politics are likely to change in November. And as investors look forward to the potential of the first pro-Bitcoin presidential candidate, Ron DeSantis, who's leading Donald Trump in the betting markets, and look forward to the next Bitcoin halving of March 2024, that has the chance to kick off a new bull market, especially if that interest rate differential has eased by then. And looking at the forward indications of inflation, whether it's housing prices or commodity prices, that looks to be a reasonable case. So, as a fiduciary, we're not advising like put all of it in crypto right now. I mentioned the 1% number.
Right.
This is definitely a dollar cost averaging industry, and it looks to us like you've got another 6 months or so before people start to discount that change in the political leadership and also in the inflation environment that we hope will kick off the next bull market.
So, like you mentioned, conversations with institutional clients. I'm sure you're in conversations with allocators and other asset managers on a regular basis. Based on where we are in the cycle and kind of the specialty required to value digital assets the way that you described in terms of your approach. Can you talk a little bit about what you're seeing in terms of institutional demand for these types of structures that VanEck has created, and your thoughts on like how this may or may not be the best way to get exposure to this space, especially at this stage of the game?
Yeah, the demand from institutions definitely exists, but it's trickier to find because the traditional distribution channels aren't really involved, right? So in Europe and the US, you've got a lot of banks that are distributing funds. Banks, crypto's still toxic to banks. The wirehouses are not really distributing. Independent registered advisors are maybe a little bit more forward, but in many cases lack standardized infrastructure to really funnel flows to crypto in a big way. Where there is more success is with public pension funds, university endowments, corporate treasuries, and high net worth. So if you look at institutional flows year to date, they've been positive. Flows were positive in August and September, even when prices were down. So we like to say that in bear markets, assets move from weak hands to strong hands. Like there have been positive flows, so that is happening. It's just not happening at the magnitude required, right? Because this is still an industry, especially with the proof of stake coins, that basically requires inflows for the prices to stay flat. And given the macro environment, like that's not what we've seen kind of across the space in the last 6 months.
It's certainly challenging, but long-term bullish in terms of where folks are in terms of this cycle, not taking their foot off the gas in terms of evaluating the opportunities in the space. Maybe the flows have not materialized quite yet, but to your point, there's still a lot of active dialogue and investigation, kind of like looking at this space to build all the infrastructure to be ready for the next cycle. So as it relates to opportunities that you see, what do you think are some use cases that are untapped for institutional managers in crypto?
Use cases that are untapped for institutional managers. I mean, one thing that we've done just from a brand building exercise is to get involved with the technology and launch an NFT, right? So we have a VanEck community NFT that gives early access to research and events. We rang the closing bell at the New York Stock Exchange with a portfolio company a couple weeks ago. Invited VanEck NFT holders got early access to that. So there's a lot of ways that this technology can enable coordination between stakeholders, and that brings benefits to like any corporation. So we've experimented with that. We're currently running our own validator nodes for a number of chains, so that also kind of gives us conviction to make bigger bets in those tokens where we understand the tech or involved in governance and architecture. It's really a very participatory technology, right? That's like self-custody, the definition of it. So institutional investors like need to get their hands dirty if they're going to understand this. Otherwise, they can't unlock that that functionality. And because of kind of the block on banks from dealing with it, like that process is taking a bit more time to sort itself out. Of course, that's reflected in token prices down 80%. So like these collection of call options are looking pretty cheap in our view.
Yeah. Yeah, getting your hands dirty is certainly one way to get the best way to get involved in the space is like really understanding how the technology works. So I really appreciate the conversation, Matt. And this has been an awesome conversation. Any closing thoughts before we let you
go? Closing thoughts. I'd just say that the Bitcoin sovereign adoption, I think, is like a key element to this story over the next 4 years. We've got 2 countries that have adopted Bitcoin as legal tender. That's a total of 8 million people in the world who are living in such regimes. But we think that number goes to 80 million over the next handful of years, and that should like catalyze a more sustainable bull market.
Well, I really appreciate it, Matt. It's a pleasure having you on. I'm sure we'll do this again sometime in the future and kind of like check back in on the bull thesis and see where we are in maybe 6 to 12 months. But really appreciate you sharing some of your thoughts on how you're approaching this space and all the great work that you're doing over at VanEck. So I want to thank everybody for tuning in. We'll be back again soon with another episode and hope you have a great day.